If you look at overall M&A deal activity in China, it's really it's a story of two halves. So it's important, I think, to split 2013 into a first half and a second half. First half M&A values were actually rather low. Some of that backlog was then pushed into the second half of the year, and you saw very strong M&A activity in the second half. So if you compare second half to first half, you actually saw M&A increasing by more than 40% across all main categories compared to the first half. If you look at it on an annualized basis, the deal numbers, the growth there is less spectacular, it's about 8%. But if you look at the deal values, actually on a full year basis, we actually got a record year for M&A deal values. They reached 260 billion. That's the highest ever. And partly there you're seeing a lot more big deals. I think there was 43 deals in excess of $1 billion US, compared to only 30 such deals in the previous year. The overall deal activity will increase, but I think to answer the question properly, you really kind of need to look into the subsectors of M&A that we're talking about. Now, one of the key drivers, for example, would be outbound M&A. We're seeing that already within PwC's business. We see a lot of these deals happening before they get announced. So we're very, very busy on outbound. A lot of things are driving the outbound, not least of which is government support and direction, in particular for the state-owned enterprises, for the POEs, the private enterprises. You've got them going overseas to explore new markets, to acquire technologies, IP, know-how, these kind of things to bring back and put to use into China. So quite a lot of things driving the outbound. Within China, the domestic M&A, you've got consolidation across many industry sectors in China, changes in the competitive landscape, which are driving M&A activity within China. And you've got the foreign guys, the inbound stuff, which is coming really off quite a low base. And as confidence returns in Europe and in the US and other developed markets, I think we're going to see the foreign inbound stuff increasing also. And the last category I think to talk about is private equity investment. Again, we saw a very strong second half. Again, within our own business, we see that pushing strongly into 2014. A lot of what's behind that is really the demand for capital in the private sector in China, and PE is emerging, as a provider of that capital, or has emerged as a provider of that capital. I think also we'll see a lot of activity around SOE reform. So the SOEs are being asked, they're being exposed to market competition. They are being asked to specialize. So this means they will be selling off non-core businesses, and there's opportunities there, for example, for private equity investors. They're being asked to go global. They're under some pressure to go global. That will drive outbound. They're being asked to diversify their shareholdings by means other than IPO. So again, an investment opportunity for private equity. So quite a lot of stuff, I think, also around SOEs driving deal activity into 2014. So if we look at the private equity market in China, I think one of the key trends is really the transitioning of the private equity market away from being a growth capital industry, minority stakes, exiting through IPO, moving towards a buyout industry, so taking controlling stakes, which gives greater flexibility in exit, not only IPO, but also trade sales to strategic buyers. So that is a transition that's starting to happen. In terms of deal numbers, we still see a lot of growth capital, but it's coming down, and I think this is the third year in a row that we saw a decline in growth capital numbers. At the same time, the buyout figures are going up, albeit still at fairly low levels. We've also seen a lot of investment by private equities in already public listed companies, and I think that's driven by low valuations of Chinese companies on stock markets, so there's an opportunity there. So there's this transitioning of the industry, and part of this is playing through into the exit situation. And so when you ask what are the challenges for the private equity industry, I think the major challenge for the private equity industry is there is a large overhang in investments that have been made against exits that have happened. And it's part of the whole private equity cycle that what you buy, you must sell. And the issue for the industry, I think, is that they are holding a lot of minority stakes, and the ability of the IPO markets, even when they're functioning normally or properly, to absorb that backlog, I think is a big challenge. And so one of the things that will start to come through, I think, to address that is we're going to have to start seeing some secondary private equity transactions, so PE selling to other PEs as a means, I think, of starting to unlock that backlog. But I think that certainly is the number one challenge for the private equity industry is around the exits.